Hello, today is March 19th, 2022. We always start with our disclaimer, so let's do that. Well, this is the same disclaimer I've had for a long time, but let me just point out that I am predicting only what happens on Monday. Take things a day at a time. The predictions I make are based on two things. One is the MeJT system. The other is a 32 calendar day cycle, and I think those predictions are pretty accurate. I do predict longer term moves, but they're not based on the same indicators, and the indicators I use, while they're helpful, don't have the same degree of accuracy as my predictions for the next day's trade. And always remember, I can be completely wrong, and any trade one makes should be at one's own risk. I don't normally talk about my own trades, my own business, but something happened to me this month which I'm going to share with you. I had a negative experience with the Peter Eliades app on TradeStation. He has an app based on cursed cycles, predicts some price extremes. 2020, I thought I'd give it a try. By the end of the year, I found I wasn't using it very much. Certainly wasn't enough to justify the cost. Emailed him, told him to cancel my subscription, and I thought I was done. He ignored what I said, continued to take money from my account. I didn't know he was doing it till over a year later. I know there are ways to access this information on the TradeStation website. I just never made it through to the right page until this month. Computers aren't my thing, and whenever there's a problem, I usually have to ask my kids to help me out. TradeStation showed me how to cancel the account myself online. I'd never been shown that. I emailed him twice, showed him a copy of the email, which I told Mr. Eliades to cancel the subscription, asked if he could verify I was no longer a subscriber, so I'd be grateful if he could do more. He didn't even reply. I think that's kind of rude, personally. So that's what happened to me, and what you do with the information's up to you. Okay, let's go over our call. Look for the pattern with the early highs. So it tends to be a rally day with a high in the final hour. Failures is straight line drop. So we got the standard thing. We had an optional target. Optional targets are going to fail 5% of the time. This one didn't print, but if you look at futures, we did print at the equivalent of this price, and there was support right under it. So there was some validity to that price. When I do my statistics, I don't count prints in futures, so officially this is one of the 5% of the times it misses. Just even though I'm counting it as a miss, it did work in futures. During the day, MeJT said this drop wouldn't stick, said this rally here wouldn't stick, said this drop wouldn't stick. In the afternoon, gave an ultimate buy signal, a MeJT buy signal. Those worked. Gave an optional target. We trade under this dashed line, and that worked also. Well, this is one of the strongest rallies we've had in some time. Let's just review what we said. We gave all these reasons why there could be a rally, possibly up to 44.82. He had dramatic improvement in breadth. This is what we posted Thursday night. He had a dramatic improvement in breadth, which has increased. Sentiment indicators reach levels typically seen at market lows, and we actually broke through resistance. We had a short-term positive sign. I thought it was spurious, but it actually worked. And the theory was we could continue higher, but no matter how much higher we went, possibly as high as 40.42, we then retrace, because we had the Fed whipsaw, the death cross, and it just didn't look like a permanent low to me. We thought at some point this would reverse. Other thing I didn't write down here is that usually the further you are under the 200-a-day moving average when the rally begins, less likely it sticks. So let's just look at this long-term picture. we had this as a wave A and a wave B with a possible top at 44.82. But that's not the only way to count this. Let's just look at the picture we had here. We had some other targets we're going to cross off. Those aren't going to print. We had a green A, a green B, which we called a few days after it hit. And now we're looking for a green C, which typically is equal to green A, either in terms of time or in terms of price. Well, if it's in terms of price, it certainly isn't there in terms of time. After a big 12-year rally like this, you would think any corrective wave would be longer. Doesn't have to be. In terms of price, we had a few possibilities. One was down around what did we say? 39.09 here, and the other was around 38.34. So those are our possible candidates for the end of green C. But what happens if instead of green C being 100% of green A, what if it's a Fibonacci 78.6? That's right there. I mean, that's not my favorite percentage. I'd rather it be 100. And it's not my favorite time. It's way too short, but it doesn't really break any rules. So let's just see how we can count this. This is my old count, and all I've done is relabel the waves. Change their degree. This could be A, this could be B, and this could be C right here. C has a Fibonacci relationship with A. And so if we rally from here, at least the general idea of the ABC was correct. Now this still looks like an ABC here, but it could easily, this action here sure looks like a third wave. And if it is a third wave, you should be able to count this as a 5-wave structure. And if you can only count it as a 3, and this is just an ABC, but if that's a 5-wave structure and this is an impulse, we're making a 5-wave structure higher. I should point out that we don't continue higher here. If we fail right at this 200-day moving average, it's a perfect top. That's usually as high as it goes. We're just preparing in case it goes higher. So can this be counted as a 5-wave structure? Well, you can't tell on the daily chart. Here's the 5-minute chart. You can count 1, 2, 3, 4, 5 for 1. There's an A, B, C for 2. And if this is the right count, which we don't know for sure, we're in a third wave up, and we've hit wave C down. Now, we don't know that yet. Again, if we reverse promptly on Monday, this whole thing falls apart. But we have to be prepared in case we keep going up, because that's a pretty strong rally. This could be wave 3, and we could have seen the bottom of this drop pretty recently. While Monday's pattern has the early high, we could still gap down. Strong Friday rallies into the close should follow through Monday, be most unusual and bearish if it didn't. A number of usually reliable signals failed this week, and when signals fail, they tend to fail big. Gapping down strongly Monday would kill the idea, but otherwise the rally should continue right through that 200-day moving average, and if we're still in a bear market, that's not supposed to happen. NASDAQ McClellan oscillator is over its upper Bollinger Band. When it reverses through it, it gives a sell signal, but it hasn't reversed yet. The volatility index is under its lower Bollinger Band. When it reverses through it, it gives a sell signal, but it hasn't reversed. At the end of a strong rally, you see things like this. You're near a top. If it's the beginning of a strong rally and you see overbought indicators, you're probably near a low. The SPX has rallied past the declining 50-day moving average and up to its 200-day moving average, and each of these usually puts a damper on further advances. But if the rally continues at its present pace, we'll have to consider the possibility we made a major low this week. If this is wave 3 up, we could continue the rally pretty much as a straight line higher. If we stop right here and reverse, which I'm not predicting and have no reason to think will happen, it's really a perfect setup for reversing this whole rally from here. But if we continue higher, and that's what usually happens here, then this three-leg whipsaw's going to fail, and we're just going to keep going up pretty much in a straight line. So Monday's open is going to be critical. It's the pattern with the early high, and if we break through this in grand style, then we've probably finished wave green C, and we're due for a continuation of a strong bull move. And if we gap down smartly, all this gets reversed. I have no reason to think we'll gap down smartly. And that's today's call.